So Raman, tell us where valuations are at right now for early stage companies.
So for early stage, actually, valuations have actually stayed at what I call traditional levels. Like I would give an example, at DiamondHead, the 20 investments that we made early stage, our average pre-money was still under $5 million. Because I think part of the reason is it's coming from a supply and demand. There are fewer and fewer people who are doing true early stage investments, so there is less competition. So till you kind of show revenue traction or prove your business model, valuations are traditional, what I think they should be, because there is a lot of risk at that stage. When you start getting to Series B and C's, because there are a lot of funds who want to invest at that level once you've got your first customers, that's where I think it's great for entrepreneurs and early stage investors like us. When you have 7 people giving you a term sheet on a company, then automatically the price goes up.
Right. So best to be an early stage investor. Toughest way to be a VC, but still the most rewarding.
It's a hard way of making money, as you can imagine, because by definition, doing early stage, you're not deploying a lot of capital. As one of my friends in the business told me, that you have to return 8 times to investors to make same kind of money that I can make by just doubling. So it clearly is. I think I do it because I think that, in my view, is the most fun part of the VC value chain, where you're really truly creating a business, working with very smart people and kind of shaping the company, versus coming in and trying to say, how do I take 20 million revenue to 40 million, which is a different kind of skill set.
Right, and as you said, there's a lot of VC firms focused on later stage companies now.
I think it's driven by really the capital. As funds raise more and more capital, it's very hard for them to say, I'll give you $100,000 and let's try out this idea. You can't afford to do that.
And what about the VC model more generally? Because there were so many firms that were started in the early part of this decade, and a lot of people saying that VC, given the amount of money that's being raised, doesn't quite work at that level. Is that, what's your view? Because you guys are focused on early stage, which is a different model than what most firms are doing right now.
Yeah, I think that is, I would say in general, this is clearly there's too much after the mid-90s craziness. A lot of money came into the business. Actually, if you look at, I think there is people don't talk about it. Actually, there's been a lot of shrinkage in the industry in terms of number of active investors that has gone down, because VC funds stick around for a long time. So even people who are not actively investing, you'll find a lot of GPs in the business who haven't made an investment in the last 3 to 4 years, but they're still out there listed. So the industry has shrunk. From a model point of view, I would say it is cyclical, in the sense that last few years, if you look, people are making money more on the LBO side because debt was cheap and available. I think that thing is changing right now. And it's really, I think it's a couple of things coming together. I think in mid-90s, with the internet and other things coming together, there was a huge explosion. And I'm actually optimistic. I don't know which one is going to run. Even if I knew, I won't share it with anybody. But there are other waves that are going to come that are going to make it actually very exciting. Because there are a couple of companies in an Onset portfolio I'm looking at. I think there's tremendous potential there.
Do you want to throw out their names?
There's a great company called OboPay, which is dealing with this whole area of being able to do mobile transactions from your cell phone. There's a company in the pervasive computing side, a company we had spun out of UC Berkeley called Centella, that's really out there dealing with this notion of having these very cheap compute elements everywhere and being able to kind of manage those environments cost effectively and really download new applications to those. So I think the way I look at it is, as the pervasive computing wave is going to happen out there, there's an opportunity to create a Cisco, a Oracle, and a Microsoft of that environment. And those opportunities are out there.
And it sounds like you're still having fun looking for them.
Absolutely.
Raman, thanks so much for taking the time today.
Thank you. My pleasure.